This is Eric Muather with Muather.com. It is February 11th, 2013. Today I'd like to take a look at gold in the way of two bear ETFs. The first one is DUST right there, which is up about 6%. And the other one is DZZ, which is up about 2% for the day. Let me set up the reasons why I think we should take a look at these ETFs. And it's an ongoing thesis that I've been trying to share with you over the last couple of weeks as far as gold is concerned. Now, today we are taking a look at the GLD. And what you notice here is we've been trading in this narrowing range over the last couple of weeks. And it seems like today we've moved below that wedge. So that seems like a break. Also seems to be that we, as of right now, gold could not recapture the level above the 50-day moving average, bumped heads with it, and now we are even trading below the 200-day moving average. On the RSI, we see that there was resistance established by this line here. That was negative short term, and then we also see that the RSI breaking down there. So today, there's also a break on the RSI. Could be the beginning of something going on here. If we take a look at GLD, now from a almost 5-year weekly chart, I would say 1, 2, 3, 4, yeah, about 4 or 5-year weekly chart, you see that this connects it to the lows of 2008, which makes this a primary line because it's more than 3 years old. And you see that now we seem to be coming out of that support level. Now we are trading on the downside of that wedge protection area. That could be significant. As far as my charts are concerned, the RSI on the weekly has not broken out. There, it's still holding. So we'll see how that develops. I think that's that on that chart. Most significant as far as I am concerned, the GLD, to me, if you look at it from a long-term monthly chart, this blue line, if we break below that, that's going to be the lowest RSI trading in 3 years. That's bearish. Also, we have the threat of breaking below 50. If and when we do that, you should expect to see a big drop in gold that month. And you'll see that as far as the MACDs are concerned, this blue line here, this connects to the three-year low levels. So we are already trading at 3-year low levels on the MACD for the gold ETF. That's bearish. Another view of this, if you take a look at another ETF, the GDP, 2 times long gold, is what I'm watching here is where it's trading at right now. It's inching very close to dropping below 50. When and if that happens, it's going to be setting up for a big move lower. Also notice that this instrument's MACD is trading at an all-time low. See whether I can draw that again. But you can see that the instrument is trading at an all-time low. See whether I can get that right. Right there. So we're already at all-time lows. That's not good. So my feeling here is that gold is starting to crack. If you take a look at the GDX, the gold mining ETF, you'll notice that the 50-day has undercut the 200-day moving average. That's always a bearish cross and tends to be a longer term picture. If you also take a look at the fact that it tried to move above this wedge, it was trading in this wedge for a while, broke below it, tried to recapture it here and failed. That's not good. If we take a look from a weekly, we see that if you take the lows of 08, these lows and these lows here, draw a straight line. Now we are breaking down here. Not only that, you'll see that the moving averages, the 10-week moving average and the 13-week moving average are about to make a fresh 52-week low, or if not, trading at fresh 52-week lows. So the moving averages also suggest lower prices as of right now. Let's take a look at the GDX from a monthly view, and you'll see from a monthly view monthly closing lows of 08, monthly closing lows of 2012. Draw a straight line. We broke down here in January. So any push here makes a 3-year low, that's going to be bearish as far as the gold mining stocks are concerned. But hey, take a look at this. The MACDs have already predicted a new game-changing breakdown here as far as the GDX is concerned. So that's a fresh all-time low, and that's never a good. Never, never, never turns out to be good. Yes, especially the gold index. There seems to be, we are looking at a game-changing situation here. I know a lot of people would like to see gold go up for fundamental reasons, but the chart right now is looking like it wants to break down. And also, when I take a look at the ultra short or the short gold ETFs, you'll see that this is a 3-year monthly for the DZZ, 2 times bearish gold. And this chart doesn't show it, but it's very close to breaking out to a three-year high. That's all we need. We need to break to a 3-year high. We need the RSI on a monthly to move above 38.2, and that's Fibonacci number. So if the RSI can move above that level, that's gonna be good for that instrument. Now, we've been watching this instrument, and let me start with the weekly chart, which is our primary focus. The weekly chart, as you can see now, we have the 13-week moving average trying to move above the 33-week moving average. Okay, the buy point, which is good long term, it's a long-term buy signal if it holds. We also see that our buy point is 4.57, which is what I've been telling you guys to put an alert. Stocks trading at above that price, so you'd like it to stay above 4.57. That's a breakout. I think this thing moves high if gold cracks. The yellow area here on the RSI shows where this instrument has been trading over the last couple of years, and now we are showing signs that maybe for the first time after many failed attempts, it's trying to move out of that range. The more it moves out of that range, the more it's gonna get stronger and stronger. Right now you see it's struggling. It's been trading in this narrow range for a while, but as this instrument gathers strength, if it moves higher, you're gonna start seeing get very strong and start putting on some strong show. So 4.57 is your entry point and should also be your, well, 5% from your purchase price should be your stop. The daily here has a buy point of 4.61, which is the highest close here. You'd like it to blast above that level. You see that we have an upward trending 50-day moving average, which is good because we want this to come and break out above the 200-day moving average. So right now we'd like it to break out above 4.61 and hold those levels and push higher. Okay, let's take a look at one more that, and this is a, excuse me, wrong ticker symbol there. All right, this is a way to short the DZZ. Is how you want to short the gold index. DUST, the one I show here, is if you want to short the gold miners. This is 3 times bearish the gold miners ETF. So the buy point here is this weekly closing high of a month ago is 40.88. That's our ideal entry point. Now that it's breaking out, you want it to stay above that level. I say my price target for this instrument is even to take out 65 or 75, either this weekly closing high or this intraday high. So I would put it, sometime this year, if it can hold above 40.88, this stock is going to trade in the 60s, 70s, even the 80s. Okay, I like the fact that we have a crossover between the 10-week moving average and the 33-week moving average. And the last time it happened here, as an example, you see that it had a nice move, had a nice doubling in price. I'm not saying it definitely has to do that, but you do need the crossover like here to take place, like it's trying to do here. Those things have to be in play, otherwise instruments don't move high. It's just how the game works. So 40.88 is your entry point. There's nothing really there on the, let me take a look at the monthly here quickly. Is you see that for this instrument to be successful, the monthly RSI needs to break out to 3-year highs and all-time highs. And as the price moves higher, it's going to have a chance of doing that. the MACDs are still not fully developed. Let's take a look at the daily. And what I like is that you see that after going down here, it's come back, and over the last couple of weeks it's settled around the 200 moving average. The daily closing high here is 42. I think it's the current daily closing high, this outside of today's action. So 42.23, you like it to stay above that. That's a daily breakout. You like it to stay above that level. And that's if you take a look at the My Secrets, there's a section there I call the flat pivot, or the flat pivot. I show you what happens whenever you have a flat 200 moving average and a breakout takes place. So there's history here that when this setup takes place, there can be a lot of success if the stocks can hold above buy point. So 42.23 is where you'd like the stock to defend on a daily closing basis. Otherwise, this one also looks good. So if gold is going to go down, the gold miners are going to go down. Take a look at DZZ and DUST, because they might be the best way to play a market that wants to take those two instruments lower. This is Eric Muadho with Muadho.com. Of course, I'll keep you posted as developments take place. Eric Muadho with Muadho.com. Good luck, peace, and blessings.